Hello traders, today we're going to cover stop hunts which are given at the right time. It will be easier for you to understand the content to be covered in this video if you watch the level count videos we have uploaded. Find links in the description below. If you are new here, don't forget to hit the subscribe button and turn on the notification bell to be the first to watch when we upload any new content. A stop hunt is a false move driven by market makers in order to clear the board and hit those stop losses before moving in their direction. These types of moves are usually fast in order to cause panic and of course grab retail traders' money by hitting the stops. The dealers have a few variations to how they hit the stops, but it is not a must for you to master all variations. These stop hunts are usually initiated at session changeovers. In this video, we are going to focus on stop hunts initiated during the London session. The first thing you must do is make sure that you are trading away from a confirmed peak formation first before observing stop hunts. Remember, do not complicate your life by trying to trade every pair out there. Be very selective and look for what's clear to see. The goal is making consistent gains on your account and not try be a trading guru that trades everything. What's more important is the pattern. Be loyal to the pattern. I will show you how a stop hunt looks like and what you should be looking for in the following slides. Now, as you can see on this chart example I have, this box right here would be our Asian session range, and we expect this Asian session range to be 25 to 50 pips max. This is what you're going to focus on. From there, when the Asian session ends, the London session will start, and this is when we'll see fast moves. In this case, we are talking of a short move, so of course we'll be trading away from a peak formation. And then we would want to see false moves. In this case, we love seeing them as, three moves up, which are false, right? 1, 2, 3, and then the dealer then forms the peak formation, also known as the high of the day, with an M formation, and this is where we'll be looking to enter our trades. As you can see on the previous slide, the Asian session was trading within a tight range, and we had a stop hunt and peak during the London session. Filter your trades by looking for a 50 pip or less Asian range. The dealer will then present the stop hunt above the Asian range and form a peak formation. These stop hunts are usually 25 to 50 pips, so expect the stop hunt and peak to be within that pip range above the box. Let us look at an example. Now, as you can see on this chart example, our Asian range, which is this blue box, was 22 pips. From this 22 pips, as you can see, we had a false move above that box, which was a 32 pip stop hunt. And from there, our M formation was formed, and the trade ran for about 70 pips for that day. In the previous chart example, we can see that the Asian range was 22 pips. Remember, we look for ranges within 25 to 50 pip Asian range. The stop hunt was then initiated above the box for 32 pips. The peak formation, high of the day, was then formed as an M formation, and from that point the trend continued bearish. If you're starting out, it is wiser to look for crystal clear setups above the box, but do keep in mind that you do not have to trade every day. If you have caught the peak at the right time, the pair will present 3 intraday pushes away from the peak and end the day. These 3 pushes will then be seen as a day of drop in the H1 time frame. Sometimes the pushes will be clear to see, and on some days it will not present 3 pushes. These pushes can also be carried over into the next session. Let us look at an example. Now, as you can see on this example, we had a 22 pip Asian range, a stop hunt above the box, which is 32 pips, a nice M formation, and as you can see, we had the first push, second push, and as you can see, the second push, the dealer gave us a pullback and ended the day. But as you can see, the third push was then given into the next session, which was our Asian session. And as you can see, this third push also had 3 pushes within that third push, and that ran for about 125 pips. As you can see in the previous example, we only had 2 pushes from the peak, and the third push was completed in the Asian session on the next day. Always remember to be loyal to the pattern. If you held this trade for 3 levels, this trade ran for about 100 pips plus. Never trade something that is not clear, for it will lead to losses. Let's look at another example. Now, as you can see on this USD CAD charts example, we had a 20 pip Asian range, a 24 pip stop hunt above the box with a nice M formation, crystal clear. But as you can see, we did not present the 3 pushes on this day. But you can count that from this peak formation, which was a reset, we had level 1 day of drop, the second day of drop, and then the third day of drop, meaning this cycle run ran for 3 days. As you can see on the previous charts example, we had a 20 pip Asian range. The stop hunt above the box was 24 pips. The peak was an M formation with a crystal clear second leg. This did not present the 3 pushes clearly as we discussed on our previous charts example, but you can see this trend run went for 3 days. It is very important to have a clear trade management plan in place to be able to manage a trade well once it moves in your anticipated direction. Always remember to look at your higher time frame levels and structures to have a solid directional bias. Most of my example are short trades because I like selling. This example can be seen also for long trades with the same checklist. Let us look at an example of how a long trade would look like. Now, as you can see on this USD CAD, we had a 22 pip Asian range and a 20 pip stop hunt below the box with a W formation, which was our peak. And as you can see from that peak formation, we had the first level, second level, and the last push, which ended the day, and this ran for 90 pips. As you can see on the previous example, the Asian range for that day was 22 pips. The stop hunt below the Asian range was a 20 pip move. A peak formation was formed with a clear second leg. From that peak point, we can clearly identify 3 pushes away from that peak formation formed after the stop hunt. This trade ran for about 90 pips for that day. I hope I have provided some clarity to you on this topic. Do not be afraid to ask questions in the comment section. Leave a like if you found this video useful. Don't forget to hit that subscribe button and turn on the notification bell to be the first to watch when we upload any new content. Money is the servant.